Hello, Maverick traders. Look at that. October is over. Hopefully everyone had a happy Halloween. And we have 2 more months left for the year. So I always like to stop at the end of the year, really talk about, trading. And when you first get started trading, you have no perception of time as far as how long a year is. Once you've been trading for as long as myself, oh, and by the way, I'm joined by Ankit Sharma. As Ankit, you've been trading for 15, 16 years now. All of a sudden, years just start to blend together and you understand that, you just are in this for the long term. So I always like to stop and kind of reflect upon that at the end of the year. But we still have 2 more months left to add to our total pip count for the year. So let's get going. In this session, we're going to be going over the news of the week. We're going to look back and look at through all the currencies. Then we're going to score everything from a +3 to a -3, and that tells us where we're going to go hunting for trades in this next week.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
Let's start off with what happened in equities. We did see a pullback, and not just a pullback, we had a nasty day on Thursday. So we'll take a look at the charts, and we'll see we are not as bullish as we used to be in equities. We have broken down, but we have not broken down below the 50-day moving average, which is the bullish-bearish line in the sand. The dollar just keeps on grinding higher. This is the 5th consecutive weekly game. And I think Ankit said to me earlier that this is the biggest monthly gain for the dollar since when, Ankit, was it?
That was September 2022. And that's when the inflation was really on the rise. So it's remarkable that we are getting this sort of price increase as we are in this rate cutting cycle now.
Absolutely, and I was very surprised on Friday to see that rates ended up going higher. We'll talk about that in this session. And then look at that, Bitcoin. Bitcoin right up against that 73,000. It has hit that level several times this year, has not broken above it. Look, as a young trader, whenever I saw a stock or a option or anything come up to resistance, hit it and then bounce off and hit it again and bounce off, I always thought, oh, double top. It's never going to go higher. I've completely changed my mind on that. The more something touches the level, the more it's telling you it wants to go through it. So who knows when it's going to actually break through and how big the run will be, but we are definitely looking at that in Bitcoin. All the other cryptos are really lagging. This is really just a Bitcoin story. All right, we had just a ton of news, so I want to spend a fair amount of time on this. Just the news was incredible. Let's first off take out the Japanese elections. This is something that definitely had an effect on the yen on the short term. The ruling party lost a lot of seats, so it was basically a criticism of the government, and the government wants to do more Abenomics, meaning low interest rates and easy monetary policy. So that shook up the yen a little bit, but I didn't see any long-term effects from that. Next up, we got consumer confidence out of the U.S. Very, very strong, but we got job openings quite weak. In fact, the JOLTS job openings were the weakest we've had, I think, in about 3 years. So look at this. Consumer sentiment, very, very positive. Job openings, not so much. We got Aussie CPI, weaker than expected. I wanted to just point out, we've seen a lot of countries around the world announce much weaker than expected inflation. We got a little something different out of the US this week, but I just want to point out weaker inflation from Australia. And then let's jump down to Friday, where we got weaker than expected inflation out of Switzerland. So as you can see here, we're getting weaker and weaker inflation. But if you take a look at the US, on Thursday, we got the core PCE price index. It's actually quite strong, 0.3. So it's telling you that the rest of the world is starting to see some pretty problematic things as far as inflation goes, creeping towards deflation. The central banks are going to start getting more aggressive on interest rate cuts. let's go ahead and finish this up. Again, ton of news here. We've got Bank of Japan. They came out and basically did nothing, said nothing. I said earlier that you could sleep through this probably, and I was right. This is definitely not that big of a deal. And then last, let's talk about Friday, the employment report. That is a very disappointing number. This is the first disappointing number we've had in a long time, like a few years. 12,000 jobs created. Now, this is a little strange because when we take a look at Wednesday, look at the ADP employment change. This is the private sector reported a huge jump in jobs, and the government reported 12,000. Some of the things in the report that people talked about was this could be due to the hurricanes. The hurricanes could absolutely have played a part of this, and they showed there was a lot of weakness in the southeastern part of the U.S. where the hurricanes hit. I think this is an aberration. I think this is just a report that is going to be forgotten. We did see the bond market fall on this for more rate cuts from the Fed on a weak employment report, but it recovered very quickly, and I think it's possibly because of the hurricanes. Ankit, what did you make about that big difference between ADP and the non-farm payrolls?
Hey, Rob. Well, I was definitely surprised with that sort of a discrepancy that we have between those two reports. Going into this report, I mean, everyone's expectation was really for having a decent jobs report. So, this was a big change, and they also revised the last month's number down as well. So, like you said, the hurricane that could be a contributing factor, but the difference, it was kind of hard to explain why there's such a vast difference between those two reports.
Yeah, so it's definitely a mixed signal here on employment. But I pointed out earlier the consumer confidence number was great. And take a look at this GDP number. Now, yes, I know it's a miss. It was supposed to be 3%. It was 2.8. That is very, very strong. That is stronger than anywhere else in the world right now. So US GDP continues to be really good. So here we got this information about the US where inflation is at 0.3%, which is a little hot. We got consumer confidence is great. And we've got a GDP that's close to 3%. This is one of the reasons why we are seeing the dollar strengthen so much. So let's go in and take a look at the numbers of last week. And let's start off with some equity numbers. As you can see here, we had a down week, down about 1.5% in equities. Crypto is basically flat, gold down a little, oil down a lot. And if we take a look at the S&P chart, look and see where we are ending here. Now, I do have to say that we are about 2 hours left. We're doing this a little early today. So there's 2 hours left of the market. And the way the market's been lately, we could have a different looking chart than this. I fully understand that. But this is where we are right here, right now at the moment with about 2 hours left. We are simply between the moving averages. I mean, take a look at where we are. We're underneath the 20. We're above the 50. The 50 held a really nice support at that point. There's also support right along this line. There's a lot of support in here. But, up here where we're above the 20-day moving average, this is bullish activity. This is bullish price action. And we've been bullish anytime the market has been above this point. So here's the problem. Right now, we're no longer in that bullish area. We're in between the moving averages, and that is basically a neutral market outlook. That is the best we can be here, is neutral. And the 20-day moving average has flattened out. Neutral is as best as you can be in equities at the moment. Checking in on the movement in Forex, I talked this week on my daily video about how Forex just wasn't moving. These are some of the lowest numbers I've seen in a weekly movement in a long time. The movement was just not there. Euro was a good mover, but outside of that, there was just not a lot of movement out there. So no big trades in the Forex market this week. They just weren't there. There were decent trades, but there weren't any big trades out there. So let's take a look at crypto. And you can see here, it's just a Bitcoin story. The rest of the cryptos were basically flat to down, and Bitcoin did really well. And it even pulled back late in the week. So at one point, Bitcoin was up 6 or 7% for the week, We will absolutely be taking a look at the Bitcoin chart when we get to that section. So here we are. We are at a zero. That's where we are on equities. So we're in between moving averages. There is no clear trend at the moment. So we just have to be at a zero. Let's take a look at the trend on the bond market. You can see here, we are just creeping higher every single day, creeping higher, creeping higher. There's no reason to think that bonds are going to go down. Sure, we could go sideways. We could base here. But I just don't see the bond yields going down at all in this environment, which tells me that the dollar probably holds its gains and might even add on to them. Here is the crypto basket. I don't want to spend a ton of time on the crypto basket because this is really just being driven by Bitcoin. I just want to look at Bitcoin, but you can see that this is generally positive, not super positive, but it is on an upward march here. Let's take a look at the economic reports for next week. And we have another busy week. And in fact, let's start off with probably the thing that's on everyone's minds. The United States presidential elections. All right, let's talk about elections. Now look, I'm not super experienced on presidential elections. They only come every 4 years. So I've been trading for, 27 years. So it's, okay, so I've seen, 6 of these? This is what we typically see. And I'm going not of what we typically see on the elections back in 2000, because the elections of today are wildly different than the elections 24 years ago. And we all know what I'm talking about. First off, I think we have to talk about, we will likely not get a call for who won the election until Friday. I want everyone just to plan on that. Just plan on that. The biggest reason why is that Pennsylvania is one of the largest swing states in the United States. And whoever wins Pennsylvania is likely going to win the election. Here's the problem with Pennsylvania. Pennsylvania law says that you cannot count mail-in ballots until after the polls are closed. So the polls are going to close Tuesday night in Pennsylvania. Once they close, they're going to have millions and millions of ballots to count. And right now, Pennsylvania is really close. It's like 50-50 between the two candidates. So it's going to take them a couple days to count those. So I just want everyone to be ready for a mess again, just like we had last time, and to where the markets are probably going to be swinging around quite a bit. So I think what you should expect is that Tuesday is likely going to be a very low volatility day. Imagine no one's out there actively making big trades, 2 hours before the presidential election. It's going to be very calm. I shouldn't say calm. It's going to probably be very constrained. Then on Tuesday night, as some of the reports start coming in, you're going to see wild movement. Wild movements up, wild movements down. We think it's best if you sit these out because you're very likely to get whipsawed. You're very likely to have one go up on some report and then another report comes out and it comes down. We don't think it's going to be a good trading environment. If you want to avoid that mess, play outside of the US dollar. Just go play outside of the US dollar. Trade things like Aussie Kiwi, Euro Swiss franc, things that are usually correlated. Those might be better places to play if you want to play for those days. But we think Wednesday is also going to be a messy day, a very messy day especially for US dollar and equities, and even like the gold market is probably going to be very, very messy and sloppy. Probably Thursday and Friday resemble more normal days, but remember, normal days with some pretty big news of who is going to be the president in the United States. So that is just the presidential election in the US. We've got also the congressional elections where we're going to see where the houses of Congress go. Again, it's going to be a wild week for sure. We think it is not a conducive week for trading. We think it's a very conducive week to being a spectator and to, watch the craziness, but we don't think it's good to be in the craziness. Monday before the election, we have the RBA. The RBA has been one of the central banks that has been saying, hey, we're going to be more hawkish than the rest, but they just got a really weak CPI report. We may see a change from their statement. They're not expected to cut rates, but we might see that they are going to start leaning more towards cutting rates, just like we heard from the RBNZ, and that sent the Kiwi down quite a bit. So I'm going into this week being more bearish than bullish on the Aussie dollar. Tuesday, employment change out of the Kiwi. If you're playing Kiwi, watch that. Second central bank on Thursday morning out of the UK. They are supposed to cut rates by 25 basis points or 0.25%. And it looks like it's going to be fairly unanimous on that. This is most likely already priced in. Not a big deal whatsoever. And then we have our third central bank of the week, and that is the Fed, and they are expected to cut by 0.25%. I don't think there's going to be much about this one. I mean, inflation has come down. We've heard the statements. Sometimes they're going to be crazy reports, and sometimes I think they're not going to be all that crazy. I don't think there's going to be much of a surprise. So I don't see this one having as much volatility as it usually does. And then on Friday, we've got the employment report out of Canada. So if you're playing the CAD, that's where we go. All right, now Ankit, you are a Canadian. Do you want to pipe in on the U.S. elections?
Yeah, that's a good question. And, I wish I had more of that insight there. But again, being an outsider, I think it's interesting and, it's kind of scary at the same time. Especially, the last couple of elections has been pretty wild. So, yeah, I mean, I think if I was in the same shoe as voter, I mean, I think there's a lot of emotions are high at this point. So there's a lot of emotions flowing, and yeah, I mean, it'll be interesting, and I think whatever is the outcome is going to is going to have a lot of impact on future policies and all of that stuff. So we've seen that before, and if we see a repeat of that, then there's likely to be a lot of movements in the market, so maybe increase a bit of a volatility. But I think one thing I would say we probably have the same feeling for is that we all will be glad once it's over, because the last few weeks is all about that, and yeah, it'll be glad that will be once we'll be over with that.
Amen to that. I will be very glad it's over. So look, I think our advice is, Tuesday, Wednesday are going to be very sloppy days. I'm not saying there's going to be opportunity there. It's just going to be shorter term in nature. We really like, taking trends, and we like, building positions and stuff like that at Maverick. That's not conducive to that style of trading. So if you are going to trade on those days, then again, shorten up everything. When you get a nice run, look for exits very, very quickly, as early as you can. If you don't want to mess with that, look, it's just 2 days. It's just 2 days, sit it out, come back on Thursday, and I think you're going to have a better trading environment. Let's go through some of the charts and let's find out where we're going to be hunting this week. As I told you earlier, I'm really just interested in Bitcoin when it comes to crypto. I've been building a position ever since we broke out above this 66,000 area. I've been building positions. I took my last position up in here, and you can see that we've had a 3-day pullback here. 3-day pullback right to this resistance point. This is where it should bounce. Now remember, I said should. Things don't listen to me all the time. They actually listen to me none of the time. It's going to do whatever it's going to do, but technicals say we should see a bounce at this level. If we see a bounce at this level, I think this is a pretty decent entry on Bitcoin because it's knocking on the door. It is knocking on that 73,000. And if we get a presidential election and it is taken as positive for the crypto market, I think that is a great impetus for Bitcoin to break out into new all-time highs. If whoever wins, the market views as friendly towards crypto, that is going to be, again, a real nice impetus for a breakout in Bitcoin. So I like Bitcoin here. We'll go in later and take a look at a 4-hour chart. You can see it's having a little pullback here on a 4-hour chart, but I'm going to take a look at this one and really talk some specific places. Other than that, I'm just not interested. Here's Bitcoin Cash. It barely broke out and then sunk right back down into the moving averages. Ethereum never even broke out in the first place. I mean, it's just going nowhere. I mean, Bitcoin has a nice little uptrend going. This one, nothing. And then Litecoin. Litecoin was my second choice after Bitcoin, but no, it did not make a new high. It did not make a new swing high like Bitcoin did, so it is absolutely off my list. I am only interested in Bitcoin long in the cryptos. All right, Anka, take us through the Forex markets.
All right, well, let's start with the US dollar. I must say that there's not a whole lot of change, and what we see is a bit of a consolidation this week. As you can see that things kind of been back and forth, and this is again always a frustrating week where you got the direction right, everything is right, and it's just not running. And I must say that this is the week where dollar had a lot of reason to run, and we just didn't see a run. We had good economic data, and we got the job miss today. But if you look at it overall, it's in consolidation phase. So going to next week, I think one thing I already highlighted that we are in this fifth week of weekly gains. So we are definitely on this higher end, but in the same time, I'm not seeing any reversal sign whatsoever. So I think until you start to see a reversal sign, you want to be trading the dollar with being a bit of the edge of your seat, because I think it could go either way, especially next week with the election outcomes. I think we can expect some movement, but so far there's no sort of exhaustion gap. There's just nothing. So just consolidation. So I think if you're looking for a turn in the dollar, you gotta wait. If you're loving that trend, you're on that trend. I think at the same time, it's just not giving us any signal to either get out. But consolidations have been the right play to get long off of. So that's just a trade that's been playing out. So we'll see what happens next week. Now, on the other end, we are looking at things that are also trending lower, like the yen. You can see we got a little pop there on that risk-off move, and we just got a bit of a sell-off. So one thing I want everyone to kind of keep in mind is that the yen trend score is pretty clear. It's on the downside, but whenever we get this risk-off move in the markets, meaning when we see market sell off, you'll see that jump in the yen, and we saw that yesterday. If you look at the candle yesterday, we got a nice little jump there in the yen. So I think yen could be a little volatile play going to next week, because we expect volatility in the markets. And these are the times where yen could be a little volatile. So dollar yen pairing, got to take a look at it. This week itself, dollar yen pair had about a 200 pip range that we were dealing with. So expect some volatility. I think once those things are out of the way, I think we can go back to shorting the yen. But for now, I think got to use a little bit of caution here. Now, this another story that sort of played out today was the Swiss franc, and I've talked about how Swiss franc has been acting as a nice haven currency. This thing just doesn't go down; like either it goes sideways or it just goes higher. I mean, take a look at today. I mean, we got the second consecutive negative inflation number. So what's going to happen? That's going to put the pressure on Swiss franc to maybe cut rates, and we can see that in the price action today. So I think it's worth taking a look at Swiss franc on the other side after, especially if it gives up that 20 and the 50-day moving average, that will give us a clear signal for a trend change. So I'm really at this point looking at possibly entertaining the idea for a bit of a reversal. So any sort of rallies, we want to see if those rallies fail, because that will be a good signal that this thing doesn't have that relative strength the way it used to. So I really like Swiss franc going into the next couple of weeks. Now, if you take a look at the comparison, euro is actually doing well. And remember, if you take a look at euro Swiss franc currency pair, now that thing has been just quite diverging. Swiss franc has done really well, so we can see that things are changing a little bit here, and the strength in the euro is more evident than the strength in the Swiss franc. So I think after a long time, it's worth taking a look at euro on the upside compared to the Swiss franc. Now, the British pound, if you take a look at this one, I mean, this thing again was a roller coaster this week. Just like we saw some roller coaster move in other currencies, this thing is the one. We had the UK budget that really caused some concerns in the UK market. So we saw a quick drop in the pound, and we can see that today those concerns are easing off. So technically speaking, nothing really has changed. This looks like a pullback, but remember, if we see making a lower high and a lower low, then that's what really give us confirmation. So if you look at anything on the trend score, nothing really has changed. They're all supported by the moving averages. But once we start to see a change there, that's the only time we'll have a confirmation that things are turning. But overall, no real change there. Now, if we take a look at other currencies, CAD, well, I see no change here either. This thing has gone sideways, and this thing is staying divergent between the US dollar and the Canadian dollar. And we'll take a look at the dollar CAD chart later in a bit, and that looks interesting. But this thing, again, Canadian dollar is not going anywhere, so not even worth taking a look at it. And then we take a look at currencies like Aussie. You can see that we are seeing consolidation this week. We are still below that 20, that 50 moving average. I like the way it's consolidating. Below that the 50 moving average was a nice support, and now it's acting as a nice resistance. So it's going to come down to the risk trends, and it's going to come down to the RBA. And if RBA sounds a little bit dovish, I think that was a great short setup in the works there. But for now, as you can see, velocity going sideways. So when the velocity is going sideways, I don't really want to jump on this. I want to jump in when it's really having a clear break. And then lastly, we have the RBNZ and the New Zealand dollar. This looks weak. We can see that we are seeing consolidation here. And that seems to be the case in some currencies here, consolidation. So I would like to just, draw the support line there and then, look for the alert when it breaks. That would be a clear signal. But yeah, you got to watch out for things when they're going consolidation, because even though the trend score looks -2 and looks like we should only be shorting here, but in the shorter term, we're just getting this consolidation phase. So once we get a break of that, it will look a lot clearer. And I think that's what happened this week, where the movements were not there because we saw a lot of consolidation in a lot of these currencies. Back to you, Rob.
Thanks, Ankit. So here we have them all stacked up, and dollar and Bitcoin are the strongest at the moment. That's where the strength is. So the big question is they've been the strongest. This is, looking back on historical data, what just happened. The big question is, are these going to continue to stay the strongest? We have Swiss franc here at a +2, but both Ankit and I agree that this is likely heading its way down the relative strength board. Euro and pound, I actually really like these two, and frankly, I like them better than dollar. I mean, what do you think about that, Ankit? Euro, pound, likely to go up a little bit, and maybe that dollar coming down a little bit?
Absolutely. I think we got to entertain that, it's just not the dollar that's the strongest. So if the dollar pull back, we could see some sort of profit taking happening, after this, uncertainty over this election goes over. That's the one thing I'm taking a look at. We could see that, the euro continues to outperform. We could see some other currencies that shine a little bit here. So, just to keep in mind is that dollar is the strongest, but then we have other currencies that are kind of in the lead there. And we can see those switch happen as well. So once the dollar sort of has its, reversal or whatever its move is, I think that'll be a great point to start taking a look at other currencies as well as a potential long candidate. I totally agree with you. There's certain trades that gets crowded, and I think dollar seems to be a really crowded trade. And that's really where you got to be very careful, because you could do everything right, but then there's always a tipping point where things will turn around. So I think the next week or two will be indicative about what's going to happen and how we're going to close the rest of the year. I think that's something we'll find out in the next couple of weeks.
Yeah, so there is, a little bit of discussion on what's going to be stronger over the next 2 weeks. That dollar has had a big move. Euro and pound are just starting to get going. I think they're better trades. But on the downside, I think there is no debate. These three all look like they're going lower. They've been basing this week, so we love that. We love that when things are a -3 in a trend and they base for the week, it's telling us that it's getting ready for the next move. Taking a look at the velocity score of what's moving right now, you can see a lot of things are basing, and that's not surprising going into this very heavy week of 3 central banks and a United States election. What's moving right now? Pound and Swiss franc on the short side. So if you were going to look at a trade early on in the week, pound Swiss franc would be the only thing that makes sense. But I don't like it because when you take a look at the trend score, they're both a +2. So I think we want to wait for some things to develop. I am just watching and waiting for Aussie, Kiwi, and Yen to start to go down. Let's talk about risk on and risk off trends. Let's say next week the US election goes, let's say it's a blowout for one candidate or the other. I think that's actually the best thing that could happen is one of the two win by a blowout. I think the market would love that regardless of which way it was, to where it's a clearly won election and there's not going to be anything like we dealt with 4 years ago. I think that's where the market wants it to go. If the market goes up, all of a sudden the yen jumps to the absolute top. That yen trade is going to be a great trade if the market goes up. If the markets go down, I think these are the trades that are going to be great. So I'm not really all that concerned about what's going up this week. I'm really concerned about what's going down. And I'm just, these three currencies, this is going to be the trade this week. Is it, okay, is the market going up? If so, we want to be short yen. Is the market going down? Great. We want to be short Aussie and Kiwi. So let's take a look at some potential trades. So let's first start off with euro and pound. So I want to know which one would I rather be long, euro or the pound. So here's the daily chart. You can see for the longest time here, the daily chart has been the euro weakening against the pound. Lately, the euro is strengthening against the pound. The 13 EMA is going higher, so that tells me I would rather be long euro than long pound at this moment. So let's pair these up. If the equity markets go higher from whatever happens during the election, it doesn't matter, then I'm looking at euro yen on the long side. So euro yen long on bullish equities on a risk on move, you can see we just cleared out of this range of resistance. We just cleared out of that, and we don't have any more resistance until up to about 168. So 168, we're at 165 at the moment. We've got a lot of room here. You know, that is 220 pips that we can make this run. So this is my favorite trade. Let's go into a 4-hour chart. And you can see that there's not any setup at the moment. I'm going to just group all this mess together. Yeah, we had a little breakout here, but failed. It's just consolidating. Can you get in during consolidation? Sure you can, but you have to sit there and twiddle your thumbs for a couple of days before it finally makes a move. Or what we can do is hang out with orders, say, hey, you know what? 166.70, I want to get in at that point. That's my entry point, 166.70. So look, you get to decide how you want to do it. I think the overall trend of this one is to the upside. So for me, euro yen is my favorite trade if the equity markets go up. If the equity markets go down, all of a sudden I'm really interested in Aussie Kiwi on the short side. The big question is euro going to be the best place to be? I'm not too sure about that, but let's go ahead and take a look at euro Aussie. All right, so euro Aussie, you can see we've had a nice run higher, running into some overhead resistance up here at 166. I would love to see a pullback. I would love to see a pullback to this 164 area. Give me a pullback. I'll come back and check in around here. I don't love this here. If best case scenario, it's going to base here for probably 4, 5, 6 days, or it pulls back. I think that's where we are at the moment. So for me, I'm not real crazy about this one at this moment. Okay, what trades do you want to take a look at?
Hey, Rob. Well, going to next week, again, I'm thinking more along the lines as you're thinking, best case scenario, worst case scenario. And if I just take a look at where we are, dollar franc is the one that I was watching, one of those trades that has room for it to run because, if you take a look at dollar CAD, take a look at some of the other currencies, they all looks very extended. If I'm looking at like a decent level to get in, and if the Swiss franc does weaken, look at that consolidation that we had and that we got a little breakout today. So technically speaking, this is the one that stands out. But as I take a look at the charts for a lot of things, there's a lot of consolidation that's taking place. It's a lot of back and forth. So these are the areas where, if you're not using a correct position sizing, or, you're not over trading, it's very easy to start accumulating losses. So I really like to get that out of the way and get a confirmation where the market's going to go and go from there. Same thing, looking at the Australian dollar against the Kiwi, like you said, I'm looking at that pairing as well because, for the longest time, we have, the Aussie's been, the RBA is more hawkish than it's the RBNZ, but you can see that this thing is slowly moving lower. There could be a bit more of a breakdown if this breaks below that, 109, the 109.70 area. We could see a bit of a breakdown, but you can see that the technical setups are not the greatest looking setups. There's a lot of chop, and until we see a clarity that we are breaking out of this chop, I think that's really where I would like to just come in. So I like Swiss franc short, but I take a look at a lot of these setups on Swiss franc. They don't look the best. Rob, you can take a look at Euro Swiss franc as well, and I like that divergence there. So I like it on this 4-hour chart, but then I go on a daily chart and be like, okay, I have a lot of resistance, that a lot of this consolidation that I've been dealing with. So, we want, if you want to see those big trades turning out, what's the next big runner? I don't see it anything right now. But once that's out of the way, I will have a lot better idea. Same thing with the dollar yen. You can see that this week had every reason for dollar to propel higher, have a big move, but it just did not. So I'm seeing dollar being tired, but at the same time, I'm also seeing dollar, not really turning lower either. Dollar CAD, Rob, is another one that I highlighted, and this is the one I find a bit more interesting. Rob, if you want to start with a weekly chart, and I want to highlight, like, is this, a confirmed breakout? Well, definitely, it looks like a confirmed breakout to me. Now, this is going back 3 years, like 2022, 2023, and now 2024. We officially have a breakout. So, are we in a point where, you start to see dollar CAD run, and you can see that this thing is the one that I find the most interesting. So as long as this holds that breakout point, which was about that 139 area, I think this is where we are seeing that policy divergence, where Bank of Canada is way more dovish than we are seeing with the FOMC. So that trade could continue working out, but I mean, you can see that this thing has been nothing but directional. So it all goes back to how do where's the next big move, and if the next big move is continuing the dollar, then I think dollar CAD probably keep running higher. Dollar Swiss franc, probably keep running higher. Maybe dollar yen continue running higher. But if the dollar is no longer in that the contender list, then I think that's what we got to look for, is where is the next big move. Which again, we'll find out. Like I said, once that dust settle, we'll find out where the next big move is going to be. But at this point, I'm going in next week with a bit of a clean slate. Don't have a strong bias, and just trade the price action. Back to you, Rob.
Thanks, Ankit. And you know what? I forgot to take a look at Bitcoin, so let's do that real quick. As you say, where's the next big move coming from? I think this could be it. Again, if the market believes that whoever wins is going to be friendly to crypto, I think Bitcoin could be a really nice breakout to the upside. Yeah, it's going to pull everything else up with it in crypto land, but you don't want to be in the laggards. You want to be in the winner here. So as I said, we're getting this pullback. We're getting a pullback from this breakout. It's pulling back right in this 69,000 area. If it holds this and can start to work its way back up, we're starting to get maybe a few bullish signals here, but nothing yet. RSI is still down here at 42. It's got more work to do before it could potentially be a buy somewhere up in the 71 to 72,000 range. It could hit resistance again at 73. But I'm telling you, one of these times it is going to break through and run, and being in it is going to be a great trade. All right, boy, we are at about 40 minutes. We usually try to keep these to 25 to 30 minutes, but it is a very, very big week. So look, expect volatility. I think taking any new positions on Tuesday night or Wednesday is just asking yourself to be whipsawed. So I think take Tuesday and Wednesday off, come back on Thursday with the FOMC meeting. I think you're at a much better place to get nice trends that don't whipsaw you. So just expect volatility this week. All right, thank you so much. This is the Currency Room. Goodbye, everybody.